Thank you, Mark, and hello from London. A much more interesting week this past week with more technical patterns than last week. So let's get on to it. We had weekly key reversals up last week in UK gilt futures as well as the German Bund futures, but interestingly not in the US fixed income futures. In the currencies, well, the best way to describe it is to call it a mixture, as we had a weekly key reversal up in US dollar against the Turkish lira, but a weekly key reversal down in US dollar against the Israeli shekel. In US dollar Indian rupee, we had a very interesting weekly key reversal down. The reason for that was the market breaking down and free from the recent 2022 based ascending wedge pattern. So far, we have seen a follow through lower last Monday, but it was halted at the slowly rising long moving average below, currently at 74.36. However, the reactionary move back up yesterday only managed to get as far as the same broken lower wedge line, and that's currently at 75.05 before turning back down. We're currently holding around the influential 50% Fibonacci line for the April 2020 to February 2021 move at 74.63. But the difference is that we now have potential targets below for this broken ascending wedge pattern. A primary target X1 is in the 73.67 area. Additionally, the break of the lower wedge line has also given us the opportunity to look at the whole of the December 2020 day action as a possible bearish halfway hesitation. If this turns out to be the case, then we have a potential target X2 below in the 73.15 area. There's one other feature to watch out for. We have the potential for a possible bow tie formation of the short, medium and medium moving averages, likely to cross over simultaneously sometime this week or early next week. It is still a potential pattern, but the moving averages are in the right order and it does look like a possible bearish bow tie formation right now. Looking at the commodities, we had a weekly key reversal up in ICE feed wheat futures, and all I can say here is that we have had a marvelous follow-on higher to this pattern already. Prices are now up to challenging the thick congestion around the 2012 high in the 227.25 area. This will be crucial as it will quantify if the action since December 2021 to date is a diamond pattern or a reverse head and shoulders pattern in construction. Staying on agriculture, there was a weekly key reversal down in EEX European processing potato futures. Now this offsets the weekly key reversal like we saw here 4 weeks ago. Meanwhile, we had a subtle but nice looking weekly key reversal up in SGX SICOM TSR 20 rubber futures last week. This already has had a follow on through higher this week and offsets a previous weekly key reversal down made 4 weeks ago. Elsewhere, we had a rare compound weekly key reversal up made last week in spot platinum. This is when we have a weekly key reversal made up from the prior week, but also another weekly key reversal up over the top of that. Interesting, there has been no follow through higher this week so far. The market is just hanging around last week's close. Speaking of not having any follow-ons, we had a weekly key reversal down in NYMEX heating oil futures, but there was no such similar pattern in the rest of the energy complex on NYMEX or on the ICE over here, and there has been no follow-on lower this week at all. Indeed, it is much like spot platinum, with the market staying where we left off last Friday. Finally, a really interesting one to us individually here in Europe. It is the ICE Dutch TTF gas baseload futures. We had a weekly key reversal down last week, the first one for 2022. What is interesting about this action is that since the big spike up back in December 2021, we've seen prices travel along a sideways triangle until last week, when the market closed very close to the apex of the triangle. Prices closed below it with a weekly key reversal down. Thus, what we needed now was confirmation. And in this, well, the market has been sorely lacking as prices instead of turned back up, moving within the triangle, and today have broken up through the upper trend line, currently at 83.50. It now depends on whether we have a strong close today and tomorrow to negate last week's weekly key reversal down. I'm always happy to answer any direct questions with anyone who is interested. With that, I'll finish this section from London. I hope that you found these comments useful.